This is the Aftermarket Radio Network.
Welcome to another episode of Business by the Numbers. I'm your host, Demarest, CPA with Parmells & Associates. I generally like to avoid politics on here, but I've been asked enough about some recent proposals from both Trump and Harris, so I figured I have to give the people what they want. Whether any of this stuff actually goes through is another question, but everything else in between is exactly what we're going to talk about this week. Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. Remember, if you want your question answered on here, just have a question for me or an idea for a future episode, shoot me an email at podcast@parmellis.com. And lastly, I cannot forget our dedicated sponsors, NAPA TRACS and Promotive, for being such loyal supporters of the show. For over 30 years, NAPA TRACS has made selecting the right shop management system easy by offering the best, most comprehensive SMS in the industry. We'll prove to you that TRACS is the single best shop management system in the business. Visit them online at napatracs.com. That's NAPATRACS.com. If you're looking for a full-service staffing solution that does everything from sourcing, qualifying, creating job descriptions, scheduling interviews, to negotiating job offers, Promotive is your answer. Visit them online at gopromotive.com. Before we get into this, I have a couple of things to remind you. First, most of this stuff will never happen regardless of who wins. A lot of times people see this, and I've already seen this on the news, people cherry-picked, oh, this is ridiculous, this will never happen. No, all of this stuff is ridiculous. Just posturing, a lot of this is giving people what they want. Most people don't understand tax laws, and if you hear, hey, this is going to give me money, this is not going to give me money, yeah, people make decisions in November based on what they're hearing here. Secondary, regardless of what people think, the president cannot sign the stuff into law. So Congress does, the Senate and the House have to agree on this stuff. And who gets control of that is arguably even more important than who wins the White House. Now, if you have control of Congress and you don't have control in the White House, yeah, there's vetoes and stuff like that. But if you want to brush up on that, you can go watch Schoolhouse Rock. Seriously, a lot of this stuff is not going to happen. And, it's something that we should plan for to a certain extent, but also can't plan for the unknown. Now, with all this being said, in the last time we had a major tax law change, and really the only major tax law change that I've experienced under my career doing this was in 2017 with Trump's tax law change. Most of that was what he campaigned on, and he made it happen. So not all of this stuff, is going to happen. Some of it absolutely is, and depending on who wins, probably what portion of this. We all saw the debate, and we're not going to talk about the debate, but all of this stems from really a comment that Harris made about giving all new small businesses a $50,000 write-off. That was really, I was watching it at that point. I think I turned it off shortly after. It caught my attention on it. I was talking to a couple clients about this. A lot of people looked at this and thought, like any good American does, well, how could I leverage this to my benefit? And I think that right there is probably a case in point of what makes tax law so hard. You have senators, congressmen, enacting these tax law plans. You have very smart people sometimes working on them, but no one's going to be smarter at taxes than the people that are paid to try and avoid this stuff. This is a perpetual cat and mouse game, right? You don't pay an accountant to pay more in taxes. You say, hey, what is the stuff out there that I need to know? This is kind of what a lot of people talk about when they talk about simplifying the tax code, is the tax code is more or less very clear. But how you navigate through this, what you're allowed to deduct, what you're not allowed to deduct, no one really tells you those rules. This is probably no different. This comment that Kamala Harris made about the $50,000 tax write-off is something that actually exists right now. Can you abuse it? Will it ever happen? Probably not. And would it surprise you to know that you are probably already abusing this one? I did some research, and we're going to go down through a number of stuff. This is not just on Harris. I'm not fact-checking anyone on here. Just kind of going down through to give more context, because most of this, just in the Trump ideas, are some of these 10, 15-second sound bites that people have ran with. We do know a little bit more about this comment of all small businesses. I think it was, she even referenced startups here getting a $50,000 deduction. They were going to expand that 10 times larger than it's ever been in the past. And it was that comment that I saw that made me kind of wonder, well, what have we ever had in the past that was a blanket write-off for any sort of money, right? Let alone 10 times more than it is. So what it is right now,
is there's something out there called startup expenses. Let's say that I go out and I'm going to start up a business. And this is not startup like tech startups. This is any sort of business. So I'm going to open an auto repair shop in 2025. I spend all this money in 2024 with planning, with meeting with lawyers, with, site permits, whatever it is. And I've now racked up a bill for $50,000. Technically, since I don't have revenue till 2025, any expenses pre-revenue are considered startup expenses. The current tax law is you're allowed to write off up to $5,000 of startup expenses, and then you have to amortize the remaining amount over 15 years. So yeah, if I spent $50,000 on startup expenses this year, I would only be able to deduct $5,000, even though I'd spent $50,000. And the remaining $45,000, I would essentially get $3,000 deduction a year for the next 15 years. That is the way the current tax law is written. If this plan that Harris is proposing goes through, I would be able to deduct all $50,000 of the $50,000 that I spent. That is really good news. The bad news is most of you guys are probably thinking to yourself, I've never heard of startup expenses, and I definitely spent money on my business before I had revenue. Where are all my startup expenses? Your startup expenses are where 99.99999% of other small business owners' startup expenses are, which is already deducted. This is something that is absolutely a real thing. Startup expenses are absolutely sometimes things that people amortize. In practice, though, most people are already getting a deduction for this. And if you think about it, it really makes absolutely no sense at all. I think the idea behind this is don't go out here and quote unquote startup businesses, lose a bunch of money, write it all off just to realize, hey, I'm not going to do that business anymore. Hey, maybe you're going to go out and you're going to start up a race team and you're going to run that race team for 3 years. You never made any revenue and you close it down. IRS doesn't want you deducting this. So some of this has to be due with hobby losses. But if I look at it from another perspective, if let's say I do want to go out and do a startup and I commit $1 million of my own money and I spend that, even at $50,000, I'm going to be pretty pissed off that I can only deduct $50,000 of the $1 million I spent this year to start the business. You can't tell me that there's a single person out there that says, well, before startup expenses were $5,000. Now I can deduct 50. So I think now I'm going to make a decision to go out and start a business. If it is, then I think these people have a rude awakening coming to them. $50,000 and really any tax credit in general should not be your deciding factor in becoming self-employed or starting a business. The last thing I will say on this is it's kind of, we'll talk about this in Trump's proposal here, but tax law is often used as incentives. So while the government doesn't have direct control over some of our day-to-day life, taxes are a lot of times used to stimulate that. If we want people to buy electric vehicles and we give a tax credit for it, it's probably going to make people more likely to buy them. If we want people to invest in solar energy credits, or if we want people to invest in solar, it's probably good to give them solar energy credits. Even if you look at something like 179 or bonus depreciation, are you going to be more likely to go out and buy a new alignment machine if you had to write that off over 7 years? Or do you think it would stimulate the equipment market if we had an expanded bonus depreciation and we could write all that stuff off this year? Same with car manufacturers and stuff like that, right? So if I am Ford, if I am GM, I'm going to spend a lot of money to lobby Congress to expand it so that large SUVs qualify for extended write-off. Because I know that if I'm Ford or if I'm Chevrolet and I get this 179 passed for SUVs as they did, I'm going to sell a lot more Suburbans, Tahoes, Explorers, and stuff like that. It is very, very common for people to use taxes to make the economy or make the population do a certain thing. If you're looking at this, then Harris's plan is trying to stimulate the economy, and they're trying to incentivize people to start a business. Do I think that's a good idea? You guys didn't pay me to say if it's a good idea. Like I said, I don't think that starting a business is something that should be done in a ones and zeros, dollars and cents type thing. That is truly a lifestyle decision, and I don't think a lot of people are really cut out for it. Most people, unfortunately, find out after they've already tried to become self-employed. But hey, that's that. Is it going to happen? Is it not going to happen? Who knows? But that one really does not affect you guys on it because, news to you, you're probably already abusing that seldom kind of exercised tax code. This is not all just on Harris. Like I said, I am not fact-checking this. And really during the debate, there was a couple things that Trump said, and I'm going to save those kind of to the end of this. I want to talk about stuff that I think is realistic or something that easily could happen. If Harris does win the presidency and she does go into office or becomes president, not vice president, I absolutely would expect her to increase this $50,000 startup expense write-off. It'd be a no-brainer, probably be an easy one to pass in Congress, but I don't think that it's actually going to change your day-to-day life. This one that Trump proposed, it really wasn't done at the debate, I don't think, but he talks about getting rid of taxes on overtime. I think it was actually at a rally or at a meeting that he did where he talked about, hey, blue-collar workers are the backbone of society, and, we should be incentivizing or rewarding people that are contributing to society and working overtime, not penalizing them and taxing them. Or taxing them at a higher rate, I think was the comment. I'm not really sure of what that is. More or less here, we have a fairly simple one where Trump is proposing that overtime is not taxed. I don't think that this one is going to come into play, and it's definitely not going to come in unmetered. Let's talk about this in all aspects. Could they do this fairly easily the way that current things are tracked right now? And the answer is yes. When you pay an employee, you have to list what their regular rate is. You have to figure out what their overtime is. It would be very easy for that to be reported separately on a W-2 or omitted. So from an administrative and tracking perspective of this, which is something that should not be understated here, they could totally do this right now. The reason I talk about the administrative ideas is some of these ones we'll talk about later. It's not possible for it to happen very quickly because we don't have the administrative side of it figured out. But for the overtime one, yeah, if they wanted to do this, they absolutely could do this right now. Remember what we talked about before with the incentives here? This leads to some pretty weird incentives here. In the past, you guys probably, if anything, underreported your overtime. Because if you have to pay an employee overtime, you're going to have to pay them time and a half. Saying the amount of hours goes into overtime calculations, a whole lot of things like that. But from your perspective and your employee's perspective, overtime is not really a good thing for you because you're paying time and a half unless you want these people working. And overtime for the employees is, kind of good and bad. Yeah, I'm working more, but I'm getting paid more money. But I would say more or less kind of a level playing field between the two parties. I'm getting a write-off for it. You're paying tax on it. It's costing me time and a half. You're getting time and a half in a pretty level playing field here. If this was to take place and overtime truly was just not taxed at all, if I'm an employee, I'm also looking at overtime even more than I have in the past. Because if you think about it this way, your overtime rate is about 1.5 times your base rate, or it's exactly 1.5 times. But what if that 1.5 times rate is tax-free? Then your overtime rate wouldn't be 1.5 times. It could be triple, even quadruple, depending on where you are and what your tax rates are. If I'm making, let's say, just for simple math, that I am making $300,000 a year on salary, I would immediately go off a salary and I would start making $1,000 an hour so that I make $200,000 a year in base pay, but I also work 3,000 hours, so I'm going to get another $100,000 in overtime pay. All of that would be 100% tax-free to me. You can kind of see on here that, yeah, from one aspect of this, yeah, we have the administrative tools to be able to set this up and enact this pretty quickly on this. But you can also see on the other side of this one, there is no loophole. There is no kind of, bait and switch here. We're taxing overtime now. And if you guys are not going to tax overtime at all, I think we will pretty quickly see a lot of pay stubs that now have overtime. Regardless if those people are really in the building for that amount of hours, yeah, time will tell, right? Both of these ones are probably the two most likely to happen to a certain extent, but on Harris's plan, it wouldn't really be a major switch. And on Trump's plan, if that does happen, I would almost guarantee that there's some sort of income phase out for this or some sort of dollar limitation. Like, hey, your first $5,000 of overtime is not taxed for any employee. Again, there's still going to be planning opportunities there. Anytime that they make a tax law, generally the first year or two is the biggest opportunity for loopholes because it's a cat and mouse game, right? And the cat's usually a little bit slower than us accountants at finding this. All in all, I regret to even dive deep, but I feel that I would be remiss if I didn't at least hit on the other, I'll call them high points or major points of both of their plans. Whether you think one of these will be better or worse for you or your business, again, you will be the judge of this.
Let's face it, your shop management system is the single most important tool in your shop, period. You need NAPA TRACS because it integrates with all the major players, including NAPA ProLink, PartsTech, OE RepairLink, Epicor, Tire Connect, Mitchell 1 Pro Demand, and more. NAPA TRACS has leading-edge tools and technology that your shop needs right now. Unlike the other guys, we'll be there after your installation with the best training and support in the business. Your training includes a learning management system that is tailored to each role in your company. Simply put, TRACS was designed and built for shop owners just like you. It all starts when a local representative meets with you to learn about your business to help optimize your shop's workflow, efficiency, and profitability. For over 30 years, NAPA TRACS has made selecting the right shop management system easy by offering the best, most comprehensive SMS in the industry. After all, it's your shop, so it's your choice. Visit us on the web at napatracs.com. That's napatracs.com. Shop owners, are you struggling to find and retain top-tier talent for your automotive shop? Introducing Promotive, on the web at gopromotive.com. With over 40 years of combined industry and recruiting experience, we're the ultimate staffing solution. We go beyond traditional agencies. Our team provides dedicated recruiters and account managers advising on processes, compensation, and benefits. We focus on placing technicians and service advisors with shops that offer the best culture, training, and long-term growth opportunities. Trust our experience to match the right talent to your shop. We carefully select shops that value employee excellence and provide an environment for success. Our dedicated team leads the entire process, leveraging our industry knowledge and expertise. Partner with Promotive and experience their advantage to help you build a high-performing team that drives your shop's growth. Visit gopromotive.com today and let us help find and keep the best talent in the industry.
There is one last thing, or really maybe one thing that they do agree on, and that is to make tips untaxed. And when they're talking about tips, that would be untaxed in payroll tax and untaxed in income tax as well. So if you look at this one really makes sense, and tip income is kind of a overreach if you ask me. The way that it works right now is if you provide good service at a restaurant, you're a waiter, whatever money they give you is taxed. It has always been taxed. This has never changed. But what has changed recently is how people tip. When I first started doing this, tips were always taxable, and every single tax return I ever saw had virtually no tips. Even if I knew they had tips, no one ever reported this stuff because they were all cash. Flash forward to today, and most people don't even have enough cash in the end of the register to tip out their waiters and bartenders at the end of the night. 99.9% of tips are now all on credit card. When you had cash tips before, you are supposed to report it. Seldom people did. Now, all of this stuff is automatically taxed. So I don't think people are getting, any more tax than they were in the past if you were looking at dollar for dollar. But yeah, we went from a system 10 years ago where probably 98% of tips were unreported to now probably the opposite. Last time I looked at this, it was $35 billion with a B was the last total tips that they taxed. And yeah, you compare that back to, 2004, 2005. I would be shocked if that number was even $1 billion, right? It's probably that drastic of a swing. But both parties on this agree, hey, we want to get rid of taxes on tips. Is that going to happen for either of them? Again, you lead to a ton of loopholes on here if you do that. Honestly, I would be surprised if either one got into office and actually made this happen. Unlike wages, unlike overtime, administrative, we don't have this stuff set up. But as far as tipped employees, people that are eligible for tips, that is a massive class of employees. So kind of a good PR pitch for both parties there, which is why they're both on board with it. Let's go to some of the more classical ones here. Democrat, Republican down the aisle. You could probably close your eyes and imagine this stuff. Trump's proposal would cut corporate taxes from 21% to 20%. Now, keep in mind, Trump's original proposal was the one that topped corporate rates from over 30% down to 21%. So a very slight change from 21% down to 20%. But I believe the 20% was what he actually wanted back in 2016, and they had to settle for 21%. Another aspect to this is there will be kind of a little bit of benefit for domestic producers, but if you are making products in the United States, your tax rate would be 15%, not 20%. The shift from 20 to 15% for domestic producers is not really a new thing. We currently have something called the Domestic Productions Activities Deduction. I actually had to look that up because I didn't know the official name of it. That one, it's still around and we'd seldom used. It ended when Trump came in last time, so it was all kind of part of what he was trying to do there. But essentially what it was is you got like a 9% deduction from your revenues on the stuff that you were making in the United States. If you're looking at all of this, whether you have a 5% lower tax rate or 9% on total income, probably kind of similar. So all kind of interrelated. But again, incentivizing people to have their businesses in America, repatriate their earnings, and also produce this stuff in America, keep stuff here and not ship it overseas. On the Harris side of things, there wasn't a whole lot on here. Neither side of these has really gone super gung-ho on actual policy and tax law changes. Harris wants to increase the child tax credit to $6,000. It temporarily was at that point under COVID and wanted to make that permanent. Increase capital gains rate for everyone. Currently, it maxes out at 22%, and the capital gains rate would go to 28%. And then even more on this for top income producers, we go to an almost 40% tax bracket for capital gains, which is the same tax rate for top income producers now, but currently capital gains max out at 22% and ordinary incomes match out at 40%. Under this proposal for new top income producers, essentially they would get rid of a capital gains rate. All of your income would be taxed at a high rate of over 40%. And if you're in a state with high income, it would mean all income, gain, not gain, are taxed at over 50%. Yeah, not really a great one there. I'm not sure what analysis I can put on that comment, but yeah. Trump wants to make Social Security benefits non-taxable, also make some of the changes, like I talked about before, that they tried to enact in 2017 permanent. Some of those are expiring. A lot of those smaller changes, like 179, bonus, are probably not even things that you think are expiring. They've kind of become permanent in our tax law eyes, but would make those permanent. Making Social Security non-taxable, I don't know if I agree with this one. This is probably one of the few ones on that side that I don't agree with, is because Social Security is not taxable right now if you don't have any other outside sources of income. The amount which you can make outside of Social Security before it becomes taxable isn't a ton, but I'm not sure that that one's really broken. If you are taking Social Security and you have a bunch of outside income coming in there, I don't think that it's really that bad that you have to pay tax on Social Security. But the other aspect of this is Social Security benefit is a benefit from a tax that you had already paid in. It doesn't really make a whole heck of a lot of sense that we're paying tax on tax money that we paid in. But if we're really looking at this, half the stuff we talk about in taxes doesn't make sense. So why start there? Having no tax on Social Security is a popular one. I can't see any argument on this of why it should be taxed. But from a fiscal policy on it, I'm not sure someone that's making or earning $300,000 in retirement has a whole lot to stand on that their $30,000 in Social Security is being taxed. All in all, like I said, this is pretty standard stuff here for the most part. It's not news that most Republicans' plans generally cut taxes and specifically business taxes, and most Democratic plans increase them. But if that's a political statement, then someone can prove me wrong. Politics means that there's an argument for both sides. What I just said there is pretty much a fact. To wrap it up, we have to cover both candidates' most aggressive, more aggressive, far-fetched, or earth-changing aspects of those proposals. Do either of these have a chance? Probably not statistically, but they are both of each side's largest kind of contribution here. We've talked about this a couple months ago, but the biggest one out here on the Harris side of things is still the boogeyman that is unrealized gains. When they clarified this, they said that this would not affect the average American. And I truly believe this because it would be impossible to enforce this on the average American. But more or less what this is it's a wealth tax. It is not an income tax because unrealized gains are not income. We haven't realized that. I'll give you an example of what it's going after. Let's say that I started Apple and I was able to get 100,000 of stock, right? I started Apple. I'm Steve Jobs. now I'm sitting on this. I've been sitting on this Apple fortune for years. And now to this day, it's worth $300 trillion, whatever it would be worth. Technically, I would have had not paid any tax on that because I didn't get any money out of this. I just invested this and it's now worth a ton of money, but I haven't filed a single tax return because I actually pulled zero income out of there. Now, how could that work? How are you going to live if you just have a bunch of stock? Well, there's a lot of things that you can do. If I have that much in stock, there's a lot of people that will pretty much give me stuff. What I'm probably going to do is instead of selling that Apple stock and paying tax on it, I'm just going to borrow money and I'm going to go to a bank and they're going to say, Hunt, what's your collateral? My collateral is hundreds of thousands of Apple stock. Well, how am I going to pay back that loan? I'm going to do a loan to pay off a loan. If I'm borrowing money against all this stock, I never have income and I never pay tax. That is the boogeyman that people think is going on, is that this ultra wealthy group is keeping all this money and they're not paying their fair share of taxes. We've went through this before. We've talked about this. I don't think it's going to happen. It's virtually impossible to do this. Jeff Bezos would be able to shoulder this. Jeff Bezos has a ton of money, a ton of net worth, and a ton of cash. What would kill this is, let's say that I, as a normal American, invested in something and I have a ton of gain. I bought a piece of commercial real estate, bought it for $1 million. It's now worth $2 million. Now I'm on paper very wealthy. I'm a millionaire. If they came back and they said, Hunt, you got to pay gain on that. It's had $1 million in gain. You owe us $200,000. How the heck am I going to pay that tax bill? Remember, I have paper gains. I put all my money into this. I have $1 million cash. I put it all down. And yeah, I get on paper, it is now worth $2 million, but I can't sell this. If I sell this, I'm not going to be able to do what I want to do. So how am I going to pay a tax bill on something that I didn't receive the cash? I don't think that this will happen because this would be a massive, massive, massive overhaul of your personal tax code. Essentially, everyone personally is a cash basis taxpayer, meaning if I did not receive that cash, I don't have to pay tax on it. And if I did spend that money, I can usually deduct it. This would kind of be changing everything to an accrual-based taxpayer, which, yeah, there could be some argument that accuracy, but just like with a business, it creates a lot more complexity and makes this virtually impossible at a larger scale. I would say slightly less, but still very unlikely to ever happen. Trump's proposal, and I think that you heard this highlighted as a 20% sales tax on everything that we do. This is actually a plan that I can get behind. What this is more or less kind of just that. Trump kind of scoffed at this of saying, well, hey, it is not a 20% sales tax, but it is kind of a 20% sales tax. If you look at what a tariff is essentially charging a tax to a foreign nation. If Germany wants to send me $1 million worth of BMWs, they're going to pay me a tax on top of it in order to do that. There is a lot of times of reasons why we do tariffs. Tariffs can level trade imbalances. If one country has very cheap labor and we don't put tariffs on their goods, then they could come sell in the United States and put all of our domestic producers out of business. From a free market capitalism side of things, yeah, you can argue that tariffs are silly. They are hindering free trade, and anytime that you hinder free trade, you generally are going to increase prices. I am not going to lie to you. If this good that I am buying from overseas is now 20% higher, whether I am the end user or I'm selling it to someone else, I don't think there could be any argument that these are going to make prices go down. No. Is there a large aspect of this of if we don't protect our domestic businesses that all of this stuff could go overseas and then we could be in a really bad position? Absolutely. What was not kind of mentioned on there is the tariffs are not meant to be used in unison with income taxes. So I think that the plan that was put out there is a bit misleading, is that, hey, not only are taxes going up and you thought inflation was bad now, everything is now going to be 20% more expensive. Trump is actually the first person that has went on the campaign trail for probably about 20 years and actually is trying to shoot for a budget surplus. Will it ever happen? I don't know. I haven't seen it in my business lifetime, so I hope that it does because our deficit is a massive issue. But something like tariffs is probably the only thing that could ever truly balance the budget. Remember, in order to balance a budget, there is generally no way around increasing tax revenue. And if you're a business owner or you're an American citizen, you are the only two parties of where we generally get our tax revenue from. We currently get money from tariffs, but it is a very, 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 very small portion of our tax revenue. Trump's proposal, if done in entirety, would actually completely eliminate income tax as we know it and would be replaced with these larger tariffs. If you look at this, a 20% tax on all the goods come in, but it's getting rid of your income tax on it, there is a lot of people that are probably going to pay less in tax. If you are making more than what you are spending, you are going to be a net saver, and these tariffs would actually probably save you money. Because if you don't buy anything, you don't pay any tariffs. The opposite, if you are a consumer, you buy generally more stuff than you make, right? You're borrowing money, then this is probably going to cost you more money. In a grand sense, if you make similar to what you spend on it, most of those people are going to be spending probably about the same, whether it goes into tax or whether it goes into a business in a form of higher prices on this. Just like a lot of this stuff, people are probably going to be on very similar playing grounds here. The idea about this that I do like is that I think that it does generally make sense. First and foremost, the most pressing issue that we probably have right now is our out of control debt. The country is in $35 trillion worth of debt. And no matter how you look at this, the government's going to need more revenues. There is no way that we can, slow down the spending fast enough or just by itself to balance a budget. Either it's going to have to be slimmed down in unison with increasing taxes, or it's going to have to be done sheerly by increasing tax revenue. Even though I think that the budget surplus is probably the biggest dream out there and the debt is something that we need to deal with, I also don't want my taxes increased, so I've never really liked that idea. If we can replace the increase in tax revenue from domestic people paying this to, overseas governments and overseas companies, then that seems like it could be a win-win for both parties. Another thing, though, is what this is very similar to what they already do in Europe. If anyone's been to Europe, you have what's called a VAT tax, a value-added tax. That is very similar to a sales tax, or essentially is a sales tax. And if you're a U.S. citizen, you don't even need to pay it. Well, you do, but you get the money back. But essentially what it is a much higher sales tax on everything. What we have right now is we have an income tax, meaning you get taxed on whatever you make. The tariffs, the VAT tax, the universal sales tax of what we're talking about here is the exact opposite. It is a consumption tax, meaning you get taxed on whatever you spend. Your goods are more expensive. There is a VAT tax on the goods that you buy. That is incentivizing people to save money, not spend money. Hey, I don't get taxed when I make it. I get taxed when I spend it. I might want to save money, put money away for my retirement versus going out and buying that item. This is kind of the most uncharacteristic one on here because while I think it makes a lot of sense, and like you said, it drives the right incentives for not only our government, but as an individual consumer, this is not really a very popular plan from the commercial side of things. This is incentivizing people to save their money, not spend it. And if anything is un-American, and we have a society where it's buy now, pay later, this one is kind of uncharacteristic. While I hope it could happen, some of this aspects has already happened. Just like everything else, I don't see this passing in entirety unchanged. All in all, will any of this see the light of day? Maybe, maybe not. But hopefully interesting topics for discussion and also important pieces to remember come November. Please share with friends. If you have any questions, ideas, comments for future episodes, please shoot me an email at podcast@powermellis.com. Just want to say thanks again for listening on the Aftermarket Radio Network. You can find all shows on the aftermarketradionetwork.com and on your favorite podcast listening apps. Thanks again for joining me on Business by the Numbers. Stay safe out there, and I'll talk to you all next week.
You've been listening to Business by the Numbers with Hunt Demarest on the Aftermarket Radio Network. Follow Hunt on your favorite podcast listening app. Let him know what you'd like him to cover. His email is in the show notes. Hunt is all for advancing the aftermarket.